The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got 24 minutes to go until the start of trading, and you got markets in positive territory yet again this morning. We're up by 56 points right now in the S&Ps. That's a gain of more than 1%. We're pushing the intraday highs yesterday. You see the acceleration. Quite a meltdown towards the end of the day yesterday. You're talking about 100 S&P points. Here's some context. We're zooming in on yesterday's action first, okay? 3 o'clock, you're trading at 53.40. By 6 o'clock, you're trading at 52.40. 100 points. But guess what? Just like that, by the opening bell, you make it back up to, look at this acceleration, man. We were just back at 53.40. Oh, no, excuse me. That's yesterday. We were just back. Come on. Why isn't my chart? We're almost there. That's the point, right? There's the highs yesterday, and we just made it back to a high of 53.34. 100 points down, 93 points back up. All since 3 p.m. Eastern Time yesterday. Volatility is back in spades, folks, as my dad would say. That's right. This morning, up by 1.1%. NASDAQ 100, we're up by 1.35% right now. 248 points in the green. 18,284. You see similar action, right? Right near the intraday highs yesterday. We'll see if we can hold or we get a little sell-off as we did yesterday. Dow up 315 right now. That's 0.8% in the positive. 39,459. And the Russell gaining above yesterday's high, up 1.5%. The Russell has been particularly volatile, up by 31 points, 2104. Bitcoin continuing to claw back the losses we had over the weekend. You're up by $300, 57,490. Not bad when you consider that on Monday we had a 49,000 handle. You got Ethereum, basically flat. You're negative $35. That's 1.5% in the red. Has not bounced back as well as Bitcoin. Percentage-wise, maybe, but you're sitting at 24.75. We were at 33.77 a week ago. Pretty remarkable. Crude, a little bit of a bid off these lows. We're up by $1.42 in crude, $74.62. Gold up a bit, up $11 at $24.42. We jump to the all-important notes and bonds, and what do we got going on? Pairing some of the exacerbated move that we had going on Monday. You got the 10-year, now 2 full points off of where we were. So maybe the market got a little bit ahead of itself, right? We got the 10-year 3.93. 3.93. I think we're at, let me see if it'll tell. I think we're at 3.78, something like that. Is that 15 basis points from where we were just on Monday? I think it might be. Let's see where we're sitting. No, we were lower than that. Yeah, we were at 3.68. Even lower than that, right? 3.68. Wow, we were at 3.68 at those spike highs at 115.03. 3.68. So that's a quarter point. Wow. The rate just on the 10-year just pulled back a quarter point from where we were. Not pulled back, excuse me. The prices pulled back. It went back up. So we were at a 3.68% yield on Monday. We're at 3.93. The market thinks the cuts are coming. Things got a little bit haywire on Monday. Probably the best way to sum that up. 30-year, down by 24 basis points right now. Again, pulling back from some of those gains that we had. On a longer-term basis, though, let's go back to the 10-year. Okay? That is a very distinct series of higher highs and higher lows. Okay? And yes, you're getting a pullback, but higher highs, higher lows, leading to lower interest rates. The 10-year now comfortably below 4% at 3.93% right now, even as we've pulled back from 115 to 103. We jump over to the dollar index. Pretty symmetrical, just inverse of what we have going on in yield, right? You spike to a low of 102.16. We've bounced $1, but much the same to yields. What do we have? We have lower lows and lower highs in the dollar, going back to basically the middle of April over the period of about 3.5 months since then. And we have a weaker dollar on the premise of potentially some weaker yields coming down the line. When those yields come down the line is anyone's guess, and how far they go also anyone's guess. Looks like the market is expecting the Fed's going to begin cutting in September. But boy, quite a range of possibilities, right? I hear 50 basis point emergency cut. I hear 75 basis point emergency cut. I hear they should go 75 in September and then 75 again in the following meeting. And then you have the chorus out there that's saying, hey, everyone chill out. Yes, they should start cutting, but it's not an emergency. They'll go 25 in September. Maybe they'll go 25 again after that. The market isn't quite sure. They're preparing for a number of possibilities, but it does seem like interest rates will be coming down in the near future, and we'll see where we go from there. How about the dollar yen? Okay, so let's keep our focus because this carry trade has been exacerbating what's been going on, and you have a little bit of a reverberation right now. So on Monday, you drive down to 141.67. Now, lower price here means yen strength, okay? Lower price means you need less yen. This is how many yen you need for $1. Okay, so $1 equals how many yen? Well, 141 is a stronger number, right? You're back to 147, and I'm going to jump over. Now, this is an opinion piece from Bloomberg, but it's interesting, and it's out this morning, right? Yeah, early this morning. I was reading it before the show. It's an opinion piece. I didn't even see who it was written by. Mohammed El-Arian, right? Familiar with him, of course. And what he's talking about, though, is that how, man, and I'm surmising, okay, but the market has just become so used to a very, what's the best word? A very accommodating, that's the best word, Federal Reserve in many markets, okay? Bank of Japan especially so, but our markets as well, right? The Fed waited so long to cut. There was arguments all over the place that they should have. And the under headline here is that the global monetary system needs to break the de facto grip investors have on policy making, okay? And what's so interesting here is, okay, now you have the Bank of Japan this morning, all right? You have the deputy governor noting early on Wednesday that the central bank, quote unquote, needs to maintain monetary easing for the time being, right? Why? Well, they just crashed their stock market 12% in one day, folks. Can you imagine if the Fed came out and said, hey, we're bringing the pain, we're going to hike, and you guys got to deal with it, and the market went down 12%? Yes, politicians, one in particular that you might be able to name, would be calling for the head of Chairman Powell, okay? And this is where things get difficult because the market is not what they're supposed to be beholden to, but that has become a real dilemma, okay? And as they put it, the immediate reaction for the market to the new Bank of Japan policy illustrated once again the dilemma that central banks led by the Fed have created for themselves over 2 decades. That's the key here, okay? Few central bankers seem willing to take the risk that Paul Volcker did and break an inflationary spiral, and we're going to see what happens. That's part of the conversation. The reason why I bring it up, right, is you have everybody clamoring for a 75 basis point emergency cut, a 50 basis point emergency cut. If you look at the underlyings of this economy, probably don't warrant a 50 basis point emergency cut. You look at what happened in the market on Monday, and everyone says, hey, come on, give us some free capital here. What's going on? So we're going to see that battle play out, and no matter what, we're going to see some volatility, and volatility, as they say, can be a trader's best friend. Yeah, so we'll see how that plays out, man. But Bank of Japan, they get a pop on that news. There's when that comment came out, okay? So that is going to ease things right now. That was the Max Payne situation. Now you have Bank of Japan pedaling it back a little bit. We're going to finish this conversation. We got a lot of earnings, folks. We got Disney, Airbnb, a bunch. Stay tuned. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&P's up 56 points. That's more than 1% right now. So jumping back to this conversation, because it is going to play into whether it's our markets because of the carry trade. You see how we can be impacted when you have a move like you had going on in Japan on Sunday night into Monday, right? That was a worldwide reverberation driven by the Japanese central bank, okay, because this carry trade has been going on for 20 years. Now, there's the dollar yen, as I mentioned. You're back up to 147. You're all the way down to 141. There's your pop overnight when you get the wording from the deputy director over there. Let's get his title exactly. Who was he? Deputy Governor Uchida noted early Wednesday the central bank needs to maintain monetary easing for the time being, okay? Now, what Mr. Elarian notes over here, okay, is that what do you do when you hear something like that from the Fed? Well, if you're a money manager, you put your money to work, okay? And that makes it even harder because that's what they're trying to break. Was seen pro-risk by the markets. Bloomberg reported that hedge funds and other fast money accounts rushed to place new carry trades funded by the Japanese currency, and that, therefore, had the yen dropping 2%. Right? Because what happens? What do? They come in and they borrow the yen and they use it for other things because they know the interest rate's going to remain low. Now, to finish up this conversation, okay, to talk about and what he talks about in here, and I agree, and this is why you do want the Fed to not be a political arm, and everything has become political these days, man. Even telling somebody that you like the local library and the books they have somehow becomes political, right? You don't think something like this. It's not supposed to be political, because then you end up bowing to the politicians because they have a reckoning coming, all right? And eventually that's going to have to happen, and they can't get it done right now as you constantly, I mean, to put things in context here, all right? Here's the yen, and then let's take a look at how the Nikkei has performed. Okay? The Nikkei dives down to 30,000. We're back to 35.5. But on a longer-term basis, folks, okay, my chart on the Nikkei and the futures goes back to, 2006. I got a low here of about 7,000. You shopped around between 7 and 10,000 until 2012. And since 2012, you've had the Nikkei drive from 10,000 up to 42,000. And this is the point in time that he says, hey, maybe interest, 0% interest rates is not where the Federal Reserve should be. Maybe we need to have a more realistic approach to our federal rates when it comes to overnight lending to make sure this economy doesn't get too hot, because we've kept interest rates at 0%. Meanwhile, the market over the last 12 years has quadrupled in price. I joked with my dad, what would the market be like in the U.S. if we had kept interest rates at 0 all the way through this? All the way through this, through everything going on. Now, inflation has been everywhere in the world. Somehow it gets pinned on U.S. politicians in America, political, right? It's been everywhere. It's not just our stimulus. Yes, it all contributes, all right? The truth always lies somewhere in between. Everything matters, but it's not the end all, okay? This has been a worldwide phenomenon. It's been dealt with everywhere, but somehow Japan has kept their interest rates at 0. Look at what the market's done over that time, right? From 10,000 to 42,000. You need some normalization of rates, folks, and it comes at the expense of short-term pain. Now, it gave back. I mean, you're talking about trading back to the highs of 2021 in the span of a month or two. Okay, which is a remarkable pullback, almost in the span of a day, right? 12%, bigger than the 87 crash. So yes, but that's what happens when you let things get too out of whack, and already they're bowing to the pressures over there. So I don't know how it's going to sort out, but what is going to happen is volatility is going to come with it, because this is a reckoning that they are going to have to deal with. All right, now maybe they're going to have to, I don't know. We'll finish it at that, but nonetheless, interesting. We go from there. Yeah. All right, we take that and we jump to mortgage rates. How about it? It would make sense. We got a drop. 6.55%. You start getting a 5 handle, and watch out, folks. I mean, even that type of a degree. When you talk about the payment over 30 years of a 7% versus 6.5 versus 6 versus 5.5, this housing market, the Fed's going to have to deal with it, okay? Because this is going to put some impetus. It's going to add stimulus. It's going to add liquidity to people who have capital in their houses, equity in their houses that they can now access if they want to refinance. But it's a big number. The average contract interest rate on 30-year fixed-rate mortgages, 6.55, down from 6.82. And guess what? It's coming down from there, folks. Yes, it sure is. We got the 10-year sitting right now at under 4%, right? You can make the very real case that we could have mortgage rates at around 6% in very short time, depending on where the Fed goes and how fast they go. But right now, the 10-year is under 4%. Historically, you can have mortgage rates somewhere in the neighborhood of just over 2% above where the 10-year is, right? Because they are basically predicated on where the 10-year is trading. You could have a mortgage rate that's about 2%. Now, that number's been higher right now compared to where it historically is, but it should reverberate back to the mean, which means that you'd have mortgage rates at 6%, and that's where we are right now. Now, there are interest rates built into this market, 4 to 6 of them already. But it seems like the Fed's going to bring it, man. It seems like they have, and for the same reason the Japanese central bank brought it, right? You're seeing a reaction in markets, and they're at 5.5% right now. There's a very real case to be made that they can cut from here and still be in a restrictive rate without inflation soaring back up. To refinance a home, jumped 16% for the week, 59% higher than 1 week a year ago. Now, I've said it before, percentages on small numbers can be deceiving. To purchase a home, increased just 1%. So what's going on? People on the sidelines are paying attention. That might be just enough to get them to refinance if they need to access that equity in their homes. but not quite enough to get them to buy the house. But boy, like I said, you start getting a 5-handle. I think just the mentality of getting a 5-handle mortgage versus a 7-handle mortgage, you might have gotten quoted, 3 months ago at that degree. Yeah, you might see a real shift in this market, man. We'll see where we go from there. But we're at 6.55, and that's before some of the carnage that we had going on recently. For loans with a 20, that's a conforming balance, etc. Yeah. Purchasing, not there. Applications for a mortgage to purchase home, still 11% lower than the same week 1 year ago. So you're dealing with some tough numbers out there. But that is about to change, folks. You just take a look of where we are on the interest rate curve, right? And you're coming back. There's your monthly. Let's put it on a 3-year weekly for some context here. That's twice we've bottomed out. We hit a 105 low in terms of high yield back in 2023. We just hit a low of 107.04, and we're at 113 right now. And I think all you're doing is you're coming back to test kind of this area of 112.24, and then we probably get a lift off from there. 10 years probably going to be comfortable at about 4% right now until we get a little bit of a indication of where the Fed goes from here, right? Are they hiking on a path that's 25, maybe skip a meeting, or are they hiking on a path that's potentially 50 basis points on an emergency rate cut? That's what the market needs to feel. Stay tuned, folks. We'll come back from open. S&P's up by 61. We'll be right back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open with the S&Ps up by 60 points. Interesting price range to open, as in we're pushing the intraday highs yesterday before you sold off 100 points by the close of action. You talk about some volatility, man, right? We got 100 points up in the middle of the day. You got 100 points down, and we almost get 100 points back up by today. That's a move for you, man. You talk about it. NASDAQ up 291. We're up by 1.6%. Let's jump around to some of those magnificent seven. You got Apple shares up by 0.4% so far this morning. Amazon, there's a pop for you, up by 2.75% to 166.37. We jump over to Microsoft shares, 2.15% in the positive to 408.32. NVIDIA continuing gains, up by 3.5% for NVIDIA shares. We jump over to Google, 2.1. Everything getting a little bit of a lift. Tesla shares basically flat at 200 on the dot so far for Tesla shares. We jump around to some of the companies with earnings. Disney down by 3.2%. So we jump into Disney earnings. Before we do, we jump around to some of the other equities. Airbnb with their numbers down by 14.5% for Airbnb. Yeah, we got Disney. We got a few others. But jumping back on Disney, so they actually make money within their streaming for the first time. But the parks could be a problem. It's back and forth for Disney. The headline beats estimates as combined streaming services turn a profit, and that's a quarter ahead of what they were talking about in terms of expectations. Combined streaming businesses comprised of Disney Plus, Hulu, and ESPN Plus turned a profit for the first time, and they were thinking that would happen guidance-wise in the fourth quarter. Parks and Experiences segment felt pressure due to lower consumer demand and inflation. It's a common theme. We'll see how dramatic that theme actually persists. But the current quarter they reported, they beat on earnings, $1.39 versus $1.19. Revenue, they beat as well. The combined streaming business, an operating profit of $47 million compared to a loss of $512 million in the same quarter a year earlier. However, without ESPN Plus, the unit reported a loss of $19 million. Now, separate, though, that ESPN Plus is different than ESPN and how they kind of categorize where each part falls. Disney recently changed how it reports its segments, with ESPN falling under its sports unit and Disney Plus and Hulu being counted as part of the direct-to-consumer entertainment segment. Okay, so they're kind of sparse in how they do all this data. Disney Core subscribers, which includes Disney Plus Hotstar in India and other countries, increased by 1%. To 118 million. They were thinking it would stay flat, so it's interesting. Remember when this used to control everything, right? So what do? They gain 1% subscribers, which is what? If they're on 118 million, 1% would be 1.1 million, something like that. So they gain 1 million subscribers. The market was thinking it would be flat. And they're making money, profitable, a quarter ahead of what they were thinking, but they're a little bit worried about the parks. Yeah. Which is going to be a problem because that's what's been driving them if that's the case. They're going to spend $60 billion over the next 10 years to improve those parks. Quite a number. But you got to keep up if you're going to be on the forefront. Yeah, and there's the number. They're going to spend $60 billion over the next decade on their parks. Quite an expansion. Revenue for the overall experiences unit, which include domestic and international parks, was up 2%. To $8.386 billion. Operating income on the U.S. parks was down 6%, and operating income internationally was up 2%. And there's the number, right? Income on U.S. parks down 6%. So that's what's worrying that market a little bit. In the longer term, pretty remarkable that they go profitable on that streaming business when they just launched 4 or 5 years ago, and they're at 118 million. Quite a number when you look at those numbers in terms of subscriber base they built out. All right. What else do we got? We talked about mortgages. Yeah, how about CVS? Slashes profit outlook on higher medical costs. Says top Aetna executive is going to leave. We jump over to CVS with their numbers. Chopping around, but you're basically flat. You're negative by 19 pennies on CVS out with their numbers. They expect adjusted earnings for this fiscal year $6.40 to $6.65, down from a previous guidance of $7. So they guide down on profit is what they're talking about. They cite higher medical costs that have been squeezing the U.S. insurance industry. Higher medical costs. We can all relate with that, even CVS, right? They cut their unadjusted earnings guidance as well, so they got their guidance in there. They beat on their numbers. They miss on revenue. $1.83 versus $1.73. Revenue $9.23 billion versus $91.5. So $91.23 versus $91.5 expected. So they miss a little bit on the revenue. They guide a little bit down. And you're chopping around basically at flat right now. Yeah, and Airbnb, checking out Airbnb, you're down by 14% for Airbnb on their numbers. And Airbnb, weaker than expected revenue guidance for the third quarter. Hurt Airbnb shares in the pre-market. Yeah, the company sees revenue of $3.67 billion to $3.73. So they're looking for revenue of about $3.7 billion in the current quarter that they're going to come out with. And the market was looking for 3.8. That's a tough one, man. Down to 111. You were trading at the beginning of the year at almost 170. And look at this equity, man. Some of these equities not quite bouncing back. What do? You go public at the end of 2020, and you're actually now below still where you went public on Airbnb. Pretty remarkable when you put it in that context, right? All right, we got a question in the den. Taking a look at the IWM, the YouTube Tigers Den, this is, on a monthly basis. Got a couple Fibonacci numbers in here. Let's take that one off for some clarity. Let's take a little longer, shorter term look real quick at this one. Yeah, so that one's going, that one's bonkers. That's gone. And let's back it up on a monthly basis. Yeah, I mean, you know, the tough part here is we just bumped up against the same area. It's going to be a tough one. I would look for what we do at 225 if you're looking to get in there, man. Because if we really got a max pain situation here, the small caps could be hurt if the economy really slows down. And that's what to be wary of, no matter what the Fed does, right? If they are really late to the party. And I'm not saying there are, but you got to assign a probability to that occurring. That's the way you got to look at it. Is it 5%? Is it 10%? Is it 20%? Is it 50%? As a trader, you have to make those determinations in your brain, okay, about what you expect the market to do and what is the probability right now that the economy has some lag in it. It will be slowing, and it's going to take the Fed some time, 6 months, 12 months, 18 months to accelerate those cuts and bring back the economy in line where the cost of capital allows it to grow versus tightening and causing it to shrink, which it has done, right? And you got quite a base that it's going to have to break through. And you see that that's exactly where we got this month, right? You trade back down to 207.28. So if you're getting into that, look for that 220 to 225 area. It's going to be critical to see how you break above that area. You have a whole year of resistance from 2021. Anybody in the Russell since those highs of 2021 is still in a losing position, which is remarkable when you look at something like the S&P, okay, that started 2021 at 3,800, ended 2021 at 4,800, and we're still sitting at 53.41 right now. Let alone the NASDAQ 100, man. Things just get more wild. You started 2021 at 12,000 in the NASDAQ, and we're trading at 50% higher at 18,000. In the Russell, you're still below that price level. So be careful for the Russell. It's going to be a tough one, and you got quite a little level of resistance up here at about that price level. Stay tuned, folks. We're coming back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back. We got markets holding on to positive gains this morning. We got the S&Ps right now up 68 points, trading at 53.35. That's 1.3% in the positive. And for some context, right, it's like the weekend never happened almost, folks, which is remarkable. We are now 216 points above the intraday lows that we were approaching at 8:30 in the morning on Friday. For some context there, all right, what is that? It's approaching 5%. What is 216 divided by 5120? 4.22%. The market is up 4.22% in the last 48 hours. 49 hours to be exact. 4.22%. You talk about it, man. Pretty remarkable. Some of that, of course, having to do with Bank of Japan easing potentially their hiking regime as things calm from there. We were down to 141. We're back at 147. You already got new traders placing new carry trades, lifting the yen a bit, causing some of that concern to wane. And we got the NASDAQ right now. How much is the NASDAQ up? NASDAQ is up 1,200 points from where we were. 1,200 points. Yeah, almost 1,150 to be exact. What is that percentage? 1,150 divided by 17,351. Is that right? Yeah. Jeez. 6.6% the NASDAQ is up off the intraday lows, man. Yeah, I had to check my math twice. 6.6% the NASDAQ is up from the lows. We got volatility, folks, as they say, in spades. What else is going on? You heard my dad's program last night. We got a special one for his market insights. Volatility is back in spades, folks, as they say. Right now, you can get a subscription to Market Insights, my dad's outstanding daily trading newsletter. Comes out every morning before the market opens. Okay, you can sign up for that, and you can save 75% off of the normal monthly price. Normally, it's $169 a month, so I think it's 75% off. That's a savings of $126 and change. You end up paying only $42 and change for the month, and it still comes with a 30-day money-back guarantee. It's not something you're going to keep. You can cancel it, get your money-back guarantee, even for the 75% savings that you pay. You head on over here, and you can see he's got his positions up here, folks, and he's having quite a year. 82.9% if you combine all of those trades that he has in there recently. I encourage you to check it out. Get in there, try it out for a month. It comes with a 30-day money-back guarantee, and if you decide to keep it, you're saving 75% off that first month. And to do that, you just enter code MI75OFF. Okay, you come on over, hit the subscribe button. You select the month, which is where this is going to be. If you think you're going to keep it, you can get better savings over there. Oh, we'll have to close that. Nonetheless, check that out. You enter the code MI75OFF is what you do, MI75OFF, and you'll save that 75% off Market Insights. And I encourage you to check it out because, boy, we got quite a market. And check out the positions. Just go into the order page over there. You can check that out as well. All right. This is quite a market indeed. Let's check in on some of the companies with their earnings. Disney shares down about 2.7% on cause for concern with the parks. Right? And boy, this has been quite a slide for Disney. 87.48. We jump over to Airbnb. Yeah, that's a tough one, man. Down by 14.5%. Not sure what to make out of that one. They gapped lower on their last earnings. They gapped lower yet again. You're now below where they went IPO. And it seems like the range that they're trading back into is this lower range of $80 to $100. And you're at 111 right now. You're down $18 on the session right now. Yeah, we'll see where we go from there. DoorDash up by 1.5% so far this morning. I bring them up following their strong earnings because Lyft is out with their numbers disappointing. Lyft down by 17%. to $9.10. You had Uber with strong earnings. Uber trading higher by 3.3%. You put this back on, let's see. Yeah, look at that resurgence, man. I was talking about this earlier in the week. Maybe that was a lower boundary. It was in at one point, kept them back on there. And you're challenging the top proportion of that. And when you look at a company like Uber and Lyft, folks, that's your Uber and that's your Lyft, okay? Look at the absolute divergence. If you're thinking about getting into the sector, stay away from Lyft, get into Uber. All right, yes, you're at some lofty prices here, but they are not created equal, to say the least. And pretty remarkable how Uber capitalized with Uber Eats during COVID, etc., and Lyft did absolutely nothing. They're paying the price this morning. Now you had Instacart out with their numbers as well. Instacart, positive numbers, up by 4.4%. Excuse me. This one's a little bit of a head scratcher in terms of, you go public, you tank right out of the gate, you go down to $22. Seems like they've saved themselves a bit. As somebody that used Instacart a tremendous amount during the pandemic, and then I use it sparingly from then on. This is one of those conversations I talk about that Uber is not a luxury. It's a necessity. When you end up using Uber, most of the times it's a necessity. Yes, Uber Eats merges those two in terms of where is it a necessity, is it a luxury? Sometimes you don't have the time, it's a necessity. Sometimes you're paying money for that time as a luxury. But Instacart, most of the time, falls more to the degree of a luxury. Now, people got kids, people got you're getting home late from work, you don't have time to do grocery shopping. That's where it falls in the necessity category versus a luxury, okay? But in a longer term, yes, they're getting money off advertising, they're getting money off that. It's very expensive. That's all I'm going to leave you with. It's very expensive to use Instacart. And when you're making large purchases from the grocery store that already have inflated prices over the last 4 years, it becomes very difficult to then pay a 20 to 25% premium on your grocery store order. And that's what you end up paying overall. When you add in the higher prices for each product, the sales, the fees, the delivery fee, the tip that goes on top of it, okay, it's a 20 to 25% hit. So if you're ordering $100, it becomes $125 before you know it. If you're ordering a $200 grocery order, very easy with a family, you're pushing $250. And that's more understandable of where it becomes a necessity, right? If you're a single person and you have time, you might just go to the grocery store yourself. If you have kids and a job and you got to go pick up the kids from daycare and you don't have time to go grocery shopping after you pick them up after work, well, what does that mean? That means you're probably shopping for a family, which means those grocery runs are probably more in the neighborhood of $200 to $300 on a weekly basis, which means you really have the ability to say, you know what, I'm just going to sacrifice 20 to 25%. I'm walking you through my own mentality because I used to use this product every single time for the grocery store during the pandemic. We had kids at home. We had Tommy was on his way. The pandemic was raging. All things lined up well to say inflation wasn't here yet, right? I said, I'm going to use Instacart. It's an outstanding service. I don't have to be around other people. Tommy's mom's pregnant, right? All that stuff comes with it. Keep the family safe. You don't know what COVID's doing yet. Now you fast forward today, and I'm like, man, I am not touching that app unless I really need to, because I'm going to go 5 minutes down the road to Publix and save myself 25%. They're going to deal with that in perpetuity. Versus Uber, not exactly the same situation in terms of how that plays out. So keep that one on your brain. They're nonetheless up by 4.5%, but they're going to face headwinds going forward for sure. And how about Shopify? We'll finish this up. We'll talk Shopify when we come back. There's a pop for you. 22.7% to the upside. They're crushing it. We'll talk some Shopify. Markets on fire. S&P's up by 80. Don't forget about market insights, folks. MI 75 off. Save 75% off your first month. Check that out during the break. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got Shopify charging higher, 22.1% to the upside. Yeah, that is a big one, man. Subscription business drives Q2 earnings out there, beats quarterly revenue estimates on AI boost. Gotta love it. You get a little AI boost in there, right? Pull it over in terms of some of the headline out there. Shopify, we'll pull a couple headlines, but there's one of them. Blow that up. Yeah, beats estimates for quarterly results as AI boost shares soar, but nonetheless, man, that is quite a pop. And this thing been struggling since you went IPO. No, not one IPO, excuse me. Since the highs of 2000, that's confusing with Airbnb. 176, you fall down to $25. We're back to 65. Quite a pop today. We check in on those Airbnb shares. Down by 14.3% on a market that's just on fire right now. We check in on Disney shares. Disney down by 2.6% right now. And Instacart, yeah, not exactly. And I hope that's not the sentiment that came across saying, lazy, that it's only for lazy single people. It's only the point that sometimes you have the free income if you're a single person and it's not much money to make that order. But those are the people that usually have the time on one side of things, right? Versus a busy family. If you're so busy, you're shopping usually for more groceries. So it's quite a conundrum that if you're that busy that you have multiple people you're taking care of, then your grocery bills are usually going to be larger and you are giving it back. Even on that open, you're up by 3% for Instacart. So be careful in Instacart, because I'll tell you myself, I love that product. But every time I pull it up, I say, can I really not find 30 minutes to go to the Publix grocery store when I'm going to pay, elevated prices? And think about it. I'm already paying elevated prices going to Publix versus going to something like Walmart, right, or Sam's. So you're paying elevated prices to send somebody else to Publix to shop for your groceries. So you're getting middled by Publix. You're getting middled by Instacart. In a high inflationary environment, there's just a lot of pressure there, for sure. All right, folks, look at these markets, man. Look at them. We got the 10-year now down about 10 ticks right now. We jump over and finish it up. How about Rivian? Rivian shares pulling back. We're getting a little bit of a pop on the open with their numbers. Rivian down by 3.8% to 1424. Stay tuned, folks. We got a replay coming up. Basil's out, but after that, live programming. Steve Rhodes coming up. Larry Pesavento, Tom O'Brien. Don't forget about Market Insights, folks, on the front page of TFNN. I'll be right back.